guys, this is Alan from Plastic Financial. How are you today? In the previous videos, I've been saying that if you want to trade one lot, which is I've been saying one lot is 100,000 units. So if you want to trade 100,000 units in the Forex market, I've been saying that you need to invest $1,000. So where does this $1,000 comes from? And that's what I'm gonna explain it to you today. So the $1,000 is the actual trade amount in the Forex market, and then to understand this actual trade amount, then we need to understand two things, which is the margin and required margin. So first let's start with margin, and let's take a look what actually is margin. So in Forex trading, let's do a quick recap on the advantage of Forex trading. So in Forex trading, we can actually use a small portion of fund to manage a larger amount of trades. So for example, if we want to trade with $100,000 in the Forex market, and we actually don't need to invest the exact 100,000 in the market, and how much do we need to manage that $100,000 in Forex market? And then that's what we're going to talk about today, and that's what margin is about. So margin is actually displayed in percentage, and is the percentage of the actual trade volume, is the percentage of that $100,000 that we talked about just now. And just to remember that margin is actually something that keep your position running, to keep your trade going. So when the trade is finished, when you close the position, the margin amount is actually going to go back to your balance. So if the margin is $1,000, then when you close that trade, that $1,000 is actually going to go back to your balance. So where do we find out the exact amount of margin, the exact percentage of the margin? So you can head to this page. Here is our homepage for Forex trading, and I posted a link in the description, so you can take a look at it. So for margin, for every broker is different. So for Hirose, we have a lowest margin of 1%. So for example, let's take a look at this one here. So you see the margin here says 1%, so meaning that if we take a look at the currency pairs here, then it means that for Euro and US dollar, the margin is 1%. And if we take a look at this one here, Australian dollar and Swiss franc, then the margin is 2%. That's how you find out the margin for different currency pairs. Okay, so now we know that the margin is the percentage of the actual trade amount. So how do we convert that into dollar, into the currency that we are trading? So to explain that, we can actually use the platform here, and we will take the British pound and US dollar as an example. Okay, so let's say we're gonna trade a micro lot, which is 0.01 standard lot, and inside a micro lot there is 1,000 units. So meaning that we are managing $1,000 funds for if we're trading with a micro lot. So how much do we actually to invest in the Forex market to manage that $1,000? So it's pretty easy here. So if we in here in the in the MT4 platform, is we put in 0.01 lot here, then we buy currency, then at this bottom here at the trade detail, then we can see that the margin is $10. So how do we come out with this $10? So as I mentioned just now, one micro lot is $1,000. So if we multiply by the margin, which is 1%, then we can come out with the amount of $10, and then that's the actual amount that we're gonna invest to manage that $1,000. Or if we want to trade with one standard lot, which is 100,000 units. So for British pound and US dollar, that's gonna be $100,000. So if we multiply that 100,000 by 1%, then we can have a result of $1,000. So that's the margin that requires for you to run that trade. So you need $1,000 to hold a one lot position, which is 100,000 units. The required margin, the required fund that you actually put in for each trade is actually depending on the currency pairs that you are trading. So it might be a bit difficult for you at the beginning, but then once you get used to it, and I'm pretty sure it's pretty easy for you. And the thing is that the MT4 platform, the MetaTrader 4 platform, is gonna actually calculate all these things by itself, so you don't need to actually do anything for it. So for the other currency pairs, for the other type of currency pairs, I will talk about more in the next video. So just make sure to follow the next video to find out more about margin and find out more about the actual trade amount that requires in the forex market. So the most important thing for you to remember now is that in order to trade with different currency pairs in the forex market, you do need to have always keep a certain amount of balance in your account so that you can trade with different currency pairs with different required margin. So that's pretty much it for today, and today we talked about margin and required margin. And for next week, for the next video, I will actually talk about more on margin for different currency pairs, and then I will talk about something on the margin call, which is something that you have to understand if you want to trade in the forex market. So just make sure to follow my next video to find out more about this these terms, and then to understand these terms for you to trade in the forex market. So meanwhile, if you do have any question, feel free to leave me a comment down there, and I can get back to you with an answer. So that's pretty much it for today, and I will see you soon again next week. And if you like my video, give me a like and subscribe to my channel for more live trading video, and I will see you soon again next week. Bye.